Good evening, ladies and gentlemen. On behalf of IndiaMART InterMESH Limited, I welcome you all to the company's Q2 FY24 earnings webinar. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Joining us today from the management side, we have Mr. Dinesh Agarwal, Chief Executive Officer, Mr. Brijesh Agarwal, Whole-Time Director, and Mr. Prateek Chandra, Chief Financial Officer. Before we begin, I would like to remind you that some of the statements made in today's conference call may be forward-looking in nature and may involve risk and uncertainties. Kindly refer slide number 3 of the earnings presentation for the detailed disclaimer. Now, I would like to hand over the call to Mr. Dinesh Agarwal for his opening remarks. Thank you, and over to you, Dinesh.
Thank you, Kshatriy. Welcome, everybody. Welcome to IndiaMART's Q2 FY24 earnings webinar. We have circulated our earnings presentation about an hour ago, which is available on our own website as well as stock exchange websites. I'm sure you would have gone through the presentation, and I would be very happy to take any questions afterwards. I'm pleased to report that IndiaMART has delivered 28% year-on-year growth in collections to rupees 337 crores and 26% growth in deferred revenue to rupees 1244 crores on consolidated basis. Revenue from operations has also grown by 22% to 295 crores. Total traffic grew to 288 million and unique business inquiry grew to 24 million respectively, representing a growth of about 10% and 6% respectively. Our total paying subscribers, subscription suppliers grew to 210,000. As communicated in the previous quarter, we did a price change in our silver subscription on May 15th, which generally has a temporary impact for 2 quarters on our new customer acquisition. In addition to the price increase impact on the gross customer addition, we also have seen more than anticipated churn on the increased customer base in the silver bucket. As a result, our net customer addition was limited to only 2,000 in this particular quarter. As the impact of this price change stabilizes and the improvement in churn happens, we will come back with the guidance on the net customer addition. While the customer addition has been slower than anticipated, we are confident of this similar collection and revenue growth for the next 2-3 quarters. On the people front, we have added 234 employees, primarily in the client servicing team, to take care of the renewals and upgrade of the existing customer. We'll continue to make these investments in strengthening our organization to leverage the growth opportunities. Now, I will hand over the call to Brijesh to update about Busy Infotech. Thank you, and over to you, Brijesh.
Hi, good evening, everyone. Busy has done a net billing of 14.6 crores in this quarter. This represents a year-on-year growth of 38%. The revenue from operations have grown by 24% year-on-year to 12.9 crores, and the deferred revenue has grown by 49% to 38.1 crore. The EBITDA for the quarter is at 1.7 crores. That represents a margin of 13%. The net profit for the quarter was 2.5 crores. We also generated positive cash flows of 2.5 crore during the quarter. There were a total of about 8,000 new licenses that were sold to customers, taking the total licenses sold count to 348,000 at the end of September. The overall performance has been in line with our expectation and also our goals of increasing the growth rate in this financial year. And I think we are on the path of realizing the goals of increasing the growth rate that we've set at the beginning of the year. With this, I'll hand over the call to Prateek to discuss about the financial performance.
Thank you, Brijesh. Good evening, everyone. I will take you through the financial performance for the quarter ending September 2023, consolidated collection from customers and revenue from operations grew by 28% and 22% respectively to rupees 337 crores and rupees 295 crores. The deferred revenue for the quarter stood at rupees 1,244 crores, an increase of 26% on the year-on-year basis. IndiaMART standalone collection from customers for the quarter were at rupees 321 crores and revenue from operations stood at rupees 281 crores, registering a year-on-year growth of 27% and 23% respectively. A growth in revenue was primarily driven by 12% increase in paying subscription suppliers and 10% improvement in ARPU due to higher monetization. Deferred revenue were at 1,205 crores, representing a year-on-year growth of 26%. EBITDA of IndiaMART standalone business stood at rupees 81 crores, representing a margin of 29%, marginal increase from 28% margin in Q1 this year. Consolidated EBITDA was at rupees 80 crores and consolidated net profit was at rupees 69 crores. Consolidated cash generated from operations was rupees 102 crores, as we had completed the buyback in this quarter, leading to a total payout of rupees 620 crores, which includes buyback amount and the related taxes and expenses. Consolidated cash and treasury balance stood at rupees 1,910 crores at the end of this quarter. Thank you very much. We are now ready to take any questions.
We will now begin the Q&A session. If you wish to ask a question to the panelists, kindly raise your hand and allow camera and microphone access. Alternatively, you may type your question in the chat menu and we will revert on it. Please restrict to 2 questions so that we may be able to address questions from all the participants. We will wait for a couple of seconds while the question queue assembles.
First question is from the line of Vivekanand from Ambit Capital. Hi, Vivekanand. Please go ahead with your question.
Hi, am I audible, Aditi?
Yes, Vivek, you're audible.
Yeah. So, my 2 questions. The first one is on the collections in the standalone entity. The growth was 27%, faster than what IndiaMART has witnessed in the last several quarters. So, I wanted management commentary on the thought process and outlook as far as collections are concerned. Also, if you could call out any one-offs or any other element related to long duration customers renewing during the quarter at higher price levels, that would help. Second question is, if you could give us an update on the churn levels across silver annual, silver monthly, platinum and gold, that will be helpful. Thank you.
Thank you, Vivekanand. See, on the collection front, I think we have been guiding that we always target about 25% or so. And in the past, because we have now accumulated customer base over the last 7-8 quarters, and those customers, some of them have graduated to a higher package and some of them have graduated to now second year also. That may be leading to there is no one-off here because, as I said, we are very well diversified across industries and across the customer. No single customer, no single industry, no single city contributes any large amount. So this 26-27% could be a 1 or 2 quarter thing, but I think the collection, as I said, we are confident that over the next 2-3 quarters, we should be able to maintain our collection growth in excess of 22-23%. That is what I've been guiding. Now coming to the churn side, on the platinum and gold customer, which is about 50% of the customer base now, and contributes about 3/4 of the total revenue contribution, that continues to remain healthy at 1% per month. So the churn in the top tier of the customers, platinum and gold, is continued to be very healthy, and which contributes about 50% of the customer base and 75% of the revenue. While the silver monthly and silver annual churns have deteriorated, probably because of the customer base or other things. So silver annual customer has moved from earlier about 2-3% to now close to 4% per month. And silver monthly, which used to trend at around 5-6%, now has gone to 7% or so on the monthly basis. So there we are seeing churns to be higher than usual pre-COVID churns. Thank you very much.
Okay, thank you. That was helpful. So if I look at the collections on a pre-COVID versus current quarter CAGR, it appears to be a 17% CAGR. I'm comparing it with Q2 FY20. So is this the number that you feel in the long run should trend upward further, or am I reading the numbers wrongly or the commentary wrongly?
Right. I mean, because FY21 and FY22, we had so many ups and downs in terms of customer not being there, lockdowns and everything. So I don't know what kind of CAGR from that period would be helpful. I think it will be a longer term CAGR has been 21% CAGR, and a nearer term CAGR, quarterly on quarter, sometimes around 25%, sometimes around 22%, and sometimes around 27%. So as long as the customer base has grown significantly in the last 6-7 quarters, which is now resulting into the collections, better collections, and that's been the trajectory ever. So I think upwards of 20% it should be possible. Whether it will be 17 or whether it will be 27, that's difficult to comment on a longer term basis.
Yeah. Also,
Right.
Vivekanand, if you also see in the consistently in the last 4 quarters, our standalone collections growth have been northwards of 23-24%. So it's not like, let's say, one-off in the scenario in this particular quarter. It has been consistently higher, or more than 23-24% for last 4 quarters.
Right. All right. The last follow-up, is there any specific reason apart from the price hike that is causing this high churn, or have you tried to identify what is causing this, and what are the steps that you are taking to mitigate or perhaps bring churn back under control, given that it is now weighing on your net adds and adding to so much uncertainty that you are unable to give a guidance even on the net adds?
Yeah. So, see, net adds has 2 components. One is the price, gross adds, and the price impact is mainly on the gross adds. Price impact will not typically have a huge impact on the net adds, on the churn side, because currently it's only been 3-4 months of the new customers being added at the new price point. Rest old customers are still at the old price point. So while typically it takes anywhere between 3 to 6 months to stabilize on the sales team and digest the price hike, I think there has been some holidays also, and it has been taking longer for us. So let's say over the next quarter or so, if we are able to fix our gross add correctly back to the similar level as we had before 15th of May. Now coming to the churn side. The churn side is, not easy to answer in one line, because there has been many differences. If you see over the last 2 years or so, our tier 3, tier 4 customers have also increased as against metro customers. We have also expanded getting customers into many more categories than the customer concentration. However, it will still look 11% only, but that 11% is also into some of these industries which may not be very conducive for current IndiaMART platform. So we will go back on the churn side, and as I said, those customers who have used platform nicely, those who have migrated to gold and platinum, they continue to engage with the platform better. You can also see that customer engagement on the platform, which is available on, say, CRM page, lead manager page, probably is one of the highest, with 123 million replies and 25 million callback. So the customer engagement is also high and everything is also high. We need to probably go back to our drawing board to see which all places we are acquiring customer. Another thing is the vintage of the customer. Another thing is we have built, client servicing team in the last 18 months. As you can see, the number of employees addition in the last 24 months has been too much. They also are newer into the system. So it could be there could be competition also within our own customer base that might be causing. So I think it's a difficult problem to solve, and we have faced this problem earlier also. I'm sure we will go back to the drawing board and see, try many different things and come back to you sooner than later.
Thank you for the elaborate explanation and all the best.
Thanks, Vivekanand. Next question is from the line of Nikhil Chaudhary from Nuvama. Hi, Nikhil. Please go ahead with your question.
Yeah, thanks for the opportunity. So my question is, I would like to probe further what Vivek has asked regarding the churn and lower subscriber addition. Sir, this is not just the one quarter we have seen lower subscriber or lower paying subscriber addition. It's been like in the last 4-5 quarters, except for one quarter, our subscriber addition has been lower than 8K, which was our initial guidance of adding 7-8K paying subscriber every quarter. Even in terms of engagement, what you mentioned, business call and query, that number remained more or less stable, even down from the COVID peak, right? So just want to understand, to contain the churn and especially growing the paying subscriber, what are the change in strategy we are doing to make sure the growth comes back there? And just one follow-up on that is, are we looking to maybe roll out the increase in price for our existing subscriber, which is slower than earlier planned, given the higher churn we have seen for new subscribers?
So, first of all, on the 8K target, I think, yes, you are right. We have missed this in 3 quarters now, out of the 7 quarters that we have had post our total thing. Now, second part is the whether we are going to roll back the new client acquisition prices. No, we are not, because it is not the churn is a different issue and the new customer acquisition is a different issue. These, as I said, these prices were reduced, especially during the second wave of COVID. When we saw that the people were really worried, and so we dropped the prices by 25% or 20%. Now we have gone back to our pre-COVID prices. So we haven't changed anything on the entry-level prices in the last 3-4 years. So we are not going to roll back. On what strategies are we going to work upon to reduce churn? Whether we will be able to increase the buyer base, repeat buyer base, reduce some of the non-performing industries, non-performing cities. I think all of them. Instead of just saying that have we been able to prioritize one over the other? No. I think all the 4 or 5 things that we need to work upon, and maybe start recalibrating our client acquisition strategy with how much to acquire from metro and how much to acquire from tier 4, how much to acquire from one industry versus how much to acquire from another industry, how much to acquire from one industry in annual mode versus how much to acquire in the monthly mode. So I think all of that, churn containment is the biggest issue for any subscription-based marketplace. And there is no one single answer, and there is no 1, 2, 3 prioritized answer. We will have to go and do things in all 5 directions, and each one of them will probably work 0.25% in our favor in the times to come.
Sure, sir. Very helpful. Just last one from my side. In terms of employee addition, we have again started adding employee aggressively after slowing down for a quarter or 2. Clearly, it might be to address the churn, but that is putting pressure on margin. So just want to understand vis-a-vis your earlier guidance of seeing incremental revenue or deferred revenue on much higher margin, how you are seeing maybe even directionally margin going forward. Thank you.
No, but where are you seeing the margin? So margins are already 29% this quarter for the standalone business, and we will continue to maintain this 28%, 29%, 30%, whatever, plus minus 1%. But I think in that range, I cannot give you exact percentage, but I think and the quarter 4 is always a low margin quarter because there is upfront cost of collection that we get. But other than that, I think margin has been consistently maintained and also rising. Maybe you are looking at the consolidated piece where we are also investing behind live keeping. We are also getting busy. We are also getting P&L losses from our associate companies. So those might be the cases, but on the standalone basis, the margins are intact.
Sure, sir. Very helpful. Thank you.
Thanks, Nikhil. Next in queue is Swapnil from JM Financials. Hi, Swapnil. Please go ahead with your question. Also request if you can put your camera on. Thanks.
Hi, thanks for the opportunity. So a couple of questions. First, on the traffic side, I think we have seen some decent improvement in traffic on a YY basis, and that has come after a few quarters where we had a flattish kind of trends, right? Any specific reason you want to call out as to why, how this traffic improvement has been achieved, and how should we see these trends moving forward as well? That's one. And the other question is on the margin side. So if I remember your commentary from the last quarter, you had mentioned that the margins would over this FY24 quarters would move towards 30%. At a Concall level. Now, obviously, that has not happened.
I don't think I ever said it at a Concall level, and I can never say it because At a console level, if we are investing 750 odd crores in accounting business and another 250 crores in the other businesses, at a console level, those are not possible to be predicted.
Okay. Let me rephrase that. In case, so how should one look at the margins then at a console level and a standalone level separately? Obviously, your standalone margins are improving, no doubt about that, and they're inching towards 29% now. But since you will be you will continue to invest in your accounting businesses, is there any guidance that you would want to give, or is there any way that one can estimate that that you would like to help us? Thank you. Those were the two questions.
Unfortunately, no, because many of these are minority investments, and their boards run independently on how to manage the growth at Vyapar and how to manage growth at industry buying, or how to manage growth at M1 exchange. And we get profit or loss coming from them, and many of them get revalued also time to time. So it is very, very difficult to predict a diversified business consolidated margin at early level like this. On the traffic side, Prateek wants to add something on that.
So sorry, I was just saying that if you see, still the
slide number 2.
No, this is referring slide number 17 of our investor presentation, which talks about EBITDA of each of the business lines, which gives a very clear visibility about the EBITDA of IndiaMART and EBITDA of the newer initiatives. Specifically, if you say Busy and Livekeeping are the other ones. So these numbers are fairly small in the overall context, though in terms of percentage margins, it may have some impact because the revenue from these businesses gets added, and the bottom line, doesn't get added up there in the terms of the profit. So therefore, in the percentage while it looks, but if you see in the absolute terms, these numbers are fairly small as compared to the EBITDA that we generate at the IndiaMART level.
If I can just add to that, is there any target spends that you have in this new businesses, yearly spends that you would do, or a cap beyond which you will not invest?
No, sir. As and when we get the right opportunity, we will invest. And as we have said that we will probably stay away from a very high cash burn businesses being acquired at a console level. We will try and see businesses which are either low cash burn businesses or which are closer to break even. And Busy is the one which is closer to break even business. And currently profitable. But my view is that it is neither highly profitable nor losing money. On the other hand, Livekeeping, we are investing. We know for sure that we will probably end up investing 1 crore rupees a month there. And that's the current target. On future, what will happen is anything that happens, I will come back and tell you. But as of now, these are the two things which are happening. Whenever new things start, we will come back and tell you.
Got it. And if you can answer that on the traffic side question.
The traffic side depends a lot upon many things. So many times changes in the Google search algorithms, focusing on desktop versus mobile. And things also help, because currently we do not do any advertising. So I cannot directly attribute it to either any advertising or any email marketing that would have worked significantly higher than the last quarter. While we have seen the traffic in general improving, And so we continue to work on UI, UX and various search parameters. However, whether this is going to be a sustained trend, that I think we will know only after another quarter passes by or so. Another part is the content aggregation that we do consistently. So as we have added about 60,000 customers in the last 6 quarters or so, those 60,000 customers content is also useful enough, which might be adding to this additional traffic, but whether it will sustainably hold or whether it will be start to increase further, that we can only comment after 2 quarters or so. I think a better number would be to also look at the unique business inquiries, because sometimes what happens, the traffic also ends up increasing if somebody starts to scrape your site. So I think the better metric would be the unique business inquiries, which has also grown, but it has grown by about 6-7% or so.
Got it. Thanks for taking my questions. All the best.
Thanks, Swapnil. Next question is from Mr. Mihir Damania. Hi, Mihir. Please go ahead with your question. We'll take question from Mr. Manoj Doshi. Hi, Manoj. Yeah, Manoj, we can hear you.
Manoj, you need to unmute yourself, please.
Can you hear me now?
Yes, we can hear you.
Hi. Is it fair to assume that the employee addition will be sort of not as high as we are having from last 2 quarters, given the subscriber addition is not so high?
Yes, it is fair to assume. I think it is fair to assume that.
Okay. Thank you.
We request participants to raise hand to ask question from the panelist. Next question is from Mr. Manish Gupta. Hi, Manish. Manish, please unmute yourself to ask the question.
Yeah, thanks for the opportunity. You mentioned that gold and platinum are about 50% of your customers and about 75% of your revenue. So I was just wondering whether the growth of customers and in the gold and platinum is a better metric of how the overall business is progressing vis-a-vis churn in silver customers, because I would imagine that if gold and platinum are 75% of revenue, they actually might be a significantly larger in terms of percentage of profit. because the gross margin on this business might be higher than on the silver customers. So just wanted to understand that would the high churn rate in silver, etc., really bother you? Because bulk of your revenue and profit is essentially coming from the gold and platinum customers.
Yeah, Manish, that is true. That is also depicted in the historically in the top 1% and top 2% and overall ARPU. So if you see the overall ARPU being 54,000 rupees, while the top 10% ARPU being 250,000 rupees, accounting for 46% of revenue alone. So if the top 10% of the customer itself accounts for 46% of the revenue, that already gives you that feel that 50% of the revenue is coming from top 10-12% customers, and that top 10%-12% customer is not also small in number. There are 22,000 customers, 21,000 customers. So you can't say that okay, your dependency is only on 10 customers accounting for. It is not 10 customers. It is 20,000 customers at 250,000 rupees average revenue. However, for a freemium marketplace like this, it is important that you continue to have a longer term growth on the silver bucket, because that silver bucket ensures your leadership on the market in the space and builds the network effect. While on the financial metric, I think the gold and platinum will probably derive, for different marketplaces different, or for different SaaS businesses different, but they will typically derive anywhere between 50 to 75% of the revenue, and maybe more than 100% of the cash flow, because the whole bottom of the pyramid is to maintain leadership and create that network effect. Even the freemium model is also for that. They don't contribute anything onto the revenue, but we do spend sizable amount of time, money, energy on maintaining and adding premium customers.
Yeah, very clear. Second question was that how do you track a share of your share of competition? Because it's not easy to define competition in this space.
So, I mean, if you directly define competition, direct competition, which offers a very similar business model, has a very large overlap with our kind of customers. We have always said Trade India and Exporters India are the two which are the nearest one. And, I think both of them are private limited companies, so they file their, annual returns with the MCA, and that data is available, and we track that closely, how we are doing. And their traffic data is also available. So, that's the, purely doing the similar business model. Now then there are indirect business models, where, we might be having 5 to 10% overlap with different businesses. This 5 to 10% overlap could be with Google, 5 to 10% overlap could be with JustDial, 5 to 10% overlap could be from Amazon also. And I'm talking this 5 to 10% overlap on the buyer side as well as on the supplier side. Now, so on that side, it is difficult to define a real market share. But on the like-to-like basis, I think it's a very clearly we used to probably have 60% market share at the time of the IPO. Today we might be having much higher market share than the IPO time.
Okay, very clear. And my last question is that, a decade, very long term down the road, do you see any chance of being able to monetize a little bit on the buyer side? I mean, we have 182 million registered buyers. There is over 50% repeat buying purchase. Do you see any opportunity where you could, maybe a decade down the line, ask a buyer to pay a little bit just to participate on your platform?
So let's say two things, so total 182 million people have sent an inquiry or made a call from this platform over the last decade or so. However, every year, last year or so, we have 38 million people who have done that. Even that number is large enough to be monetized. That monetization is possible in 2-3 ways. People have done that. So if you get into an e-commerce mode, where you are able to charge a convenience fee for buyer for every transaction, or charge a commission from seller. We generally don't intend to necessarily promote a high commission marketplace. We take pride in saying that we are a zero commission marketplace. Maybe 1-2% commission for facilitation is possible. Nobody in the world has proven that big time. On our payment subsidiary, whatever that revenue that we generate, that's all of it, 100% of it from the buyer monetization, because we only charge buyers. For the sellers, the buyers pay for the credit that they avail through credit card or other methods. Tomorrow, whether we will be able to find a product like Amazon Prime or Zomato Gold, we don't know. We haven't seen that happening much in the 1688 in China. But yeah, you never know. Thank you.
Okay, thank you.
Thanks, Manish. Next question is from the line of Mr. Rahul Jain from Daulat Capital. Hi, Rahul. Please go ahead with your question.
Can you guys hear me?
Yes, we can hear you.
Yeah, thanks for the opportunity. Basically, wanted to understand slightly more in terms of what we are doing to increase the ARPU at the top end of your subscriber base, where possibly the increased activity on the digital side maybe helping them to value our platform and proposition slightly better. So we've been seeing that ARPU number going up, but if you could share some of the inputs in terms of what we are doing to ensure that we are able to get more and more from that top 25,000 customer and beyond.
Thank you, Rahul. So, historically, I think I've talked about this maybe 2 years ago in the Concall, but not recently. So historically, we have had very, a similar all category, all cities or all location based pricing for silver, gold, platinum, all customers. So our leading supplier or our star supplier packages used to be agnostic of the number of categories or number of locations, as many as you deal into. Over the time, we have moved to limiting the number of categories as well as increasing the monetization. Then I think we moved to location and category combination. We are now in the process of moving to purely category-based pricing, category-based pricing framework. So instead of you buying a X number of category, you buy one category separately. And that itself actually reduces the overall input entry price point, but at the same time gives us higher ARPU for customers who actually use that properly. So effectively, if you see the ARPU of top 10% customer, that has grown significantly over the last many years. And if you actually subtract, most of the ARPU gain has come in typically from top 10% customers only. I think that's already built in, and these are the 2-3 initiatives that we have taken.
So when you say categorization, is there some focus on keyword monetizations also?
What?
Keyword monetization.
When I say category or when you say keyword, they are interchangeable. So, our categories are so micro that they are, so cotton shirt would be one category, full sleeve shirt would be another category, designer shirt would be another category. So these are very similar to keywords and categories. So we don't sell categories separately and keywords separately. So when you buy a particular category, you get that keyword also as a search keyword.
Right. So player with more number of SKUs and scale player are eventually the player where the ARPU monetization could be far superior.
Well, yes and no, because it is not. I mean, in fact, if you have less number of SKUs or categories or keyword, in fact, it might be more useful for a customer like that to use an online platform, because here the targeting is very accurately possible. While for a brand or for a customer who owns multiple keyword and multiple category or multiple SKU, there might be other avenues of promotion. So like traditional dealer distribution or going to a slightly mass media of advertising. But if you have a very unique product and unique pricing, a unique location targeting, then I think so it helps in both the cases. I can't say that one over the other.
Right. And last bit on this categories that we define, some 97,000 odd category that we have. Is there a way to understand that, of course, many of these categories are subcategories within a particular domain. So which categories, how many of these 97,000 category you see India has a significant TAM, any threshold if you want to draw and say that, okay, a category is defined category of a significant size. Let's assume if it has a 100 crore market in India, or whatever way you want to define it.
So one way to look at this is, instead of looking at 100,000, just look at these 56 industry segment that is given here. And I think we have already given some 48 industries here. So out of these 48 industries, it is clearly visible that 8% is construction, building, raw material, industrial plant, machinery, equipment, and like that. And if our total total GMV is anywhere between 0.5% to 1% of GDP, that makes it about $15 to $30 billion. Now, based upon that, even 1% of a share on that market makes it 150 million rupees market. So, given that the overall B2B market size itself is more than $1 trillion market size, defining our TAM per category is slightly difficult and slightly too big. For us, we are still a very, I think, scratching the surface, or I don't think IndiaMART के होने से या ना होने से कुछ बहुत major फर्क अभी पड़ता है. But can it make a lot more difference to the economy in 5-10 years? Yes.
Understood. And last bit, if I can, basically, this churn issue that we are facing potentially because of the price hike factor. So is it any change in the existing churn behavior of the existing customer that we have observed, or it is simply that the gross addition number is not picking up with the increased pricing, which is resulting into net small addition per quarter basis, or it's a combination of both?
Let me again clarify. The price increase has nothing to do in the short term on the net customer addition or in the short term on the churn, because there is still less than 10% of the total customer base added in the last 4-5 months. They typically have the price increase, typically have the early effect on the gross addition. The churn is obviously because we used to add about 20,000 odd customers per year, and last year we added about 34,000 customers. Now that sudden influx of this new customer is one region that we have seen even in the past, FY16-17 के बाद भी, and now also. So that's one region, but I think it cannot be just one region. It has to be a combination of our sales and service, tier mix, industry mix, product performance. So I think all of that, we will be able to probably fix the gross addition, which will probably take our net customer addition a little higher than what we have delivered in the last 2 quarters. But for us to be able to do consistently 5,000 to 8,000, I think we need to fix the churn for sure, and that is not the easy one to fix. It generally takes time to fix that thing.
Understood. Thank you. That's it from my side.
Thanks, Rahul. Next question is from the line of Ms. Ruchi Mukhija from Elara Security. Hi, Ruchi, please go ahead with your question.
Hi, am I audible?
Yes, Ruchi.
Many of questions are already answered. So 2 bit. One, your top 10 paying suppliers, which today makes 46% of the revenue, they have been growing at a faster rate than the company for consistently 9 quarters, more than 2 years. Now this quarter, that trend is different. There is a divergence to this trend. So could you update us regarding your client mining effort for this bucket, and is there any strategic change here? That's question number 1. And secondly, for the silver category, where we are highlighting that the churn rate was higher, have you already put in place some mechanism to curtail that churn? I understood, I got that the results may come with a lag, but have you already started, and which are those steps that we have already taken?
So on the churn side, I think I've already answered 2-3 times repeatedly the similar answer. So I don't have anything else to add. On the top 10% customers revenue share, I didn't understand an ARPU. I didn't understand what are you pointing at this quarter being different than the previous 7-8 quarters.
So this 46% or the top 10% of your paying supplier for, I would say, previous 9 consistent quarter, more than 2 years, have grown at faster rate than the overall IndiaMART standalone business growth. This quarter, their growth was lower than the overall company growth. Not material difference, but still lower. So trying to understand the client mining effort, or I would say upscaling in this bucket. Is there some strategic change, and do you expect that this pace of growth to cool down further, or how to look at this?
So it is top 10%. So if my total customer base has grown only by 2,000, it is the top 10% of the customer base that also has grown by 200 only. Or 200 only. So that's about it. There's nothing else to read here.
Nothing else is okay. It's just the.
It's just a statistical number.
Statistical number which is causing this difference. Got it. Thank you.
Thanks, Ruchi.
Hello.
Thank you very much. It has been a very engaging session. I would now like Dinesh to give his concluding remarks.
Thank you, ladies and gentlemen, for joining our second quarter conference call. We have tried to address all the queries in the available time and whosoever have raised hands. But still, if I could not take anybody's question, please feel free to contact our investor relations team, and we'll be more than happy to answer that. Wishing you all the very best on these upcoming festival times. A very, very happy Deepavali to all of you, and wishing you a very prosperous New Year for all of you. Thank you very much.
Thank you, everyone. On behalf of IndiaMART, we now conclude this webinar.